Welcome everyone to IVA. Welcome to those of you who are here actually on place at IVA, and welcome to all of you who are following this seminar via link on the web. My name is Fredrik Sjöholm. I'm a member of IVA and chairman of the economic division. Today we're going to kind of look beyond the borders of Sweden and discuss and learn from another country on another continent, from Zimbabwe. And I think that's important and interesting for several reasons. One is that it's clear that Africa as a continent is going to be of increased importance in the decades to come for geopolitical, geoeconomic, and not least demographic reasons. It's also the case, I would say, that it's not only me, but I think many more Swedes that kind of lack in knowledge of what's happening there. So I'm really pleased that we have an excellent kind of group of people that are going to tell us much more about what's really going on in Zimbabwe in particular. And with those words, I'm going to hand over the microphone to our moderator of today, which is Anders Lindberg.
Thank you very much, Fredrik. I'm Anders Lindberg. I'm the deputy chairman of IVA. I think that from a Northern European perspective and from a Swedish perspective, we tend to follow perhaps 5, 6, 7 African countries more regularly. We know fairly well what is happening there. And for a long time, not always for the best reasons, I think Zimbabwe has been one of those countries. And also, to be honest, and the ambassador told us we could have an honest discussion here, Zimbabwe is not normally the country winning the PR prizes. So there might be something there beyond what we think we know about the country, and that is the purpose of this seminar, to get the knowledge of a country that we think we know, but we perhaps do not know it as well as we think. We are going to have a starting point with the economic case of Zimbabwe, some of the basic figures. We're going to listen more from the inside about the economic collapse of Zimbabwe and how you got out of it, and what are your plans now going forwards. And then we're going to broaden the picture and listen a little bit more about the wider picture of the economic development in Africa. And then we're going to look at the international toolbox and experiences. And we have a great panel presentators here. We have material being prepared by Johan Schück, who is not here, but that's going to be presented by Christian Lindberg. We have Ambassador Mushonge, who not only is the Zimbabwe's ambassador to Sweden, but has also been an MEP, Member of Parliament for the opposition in Zimbabwe. We have Jörgen Levin, one of the most senior and well-experienced Swedish scholars on the development in Africa. We have Lars Thunell, who has been working within the World Bank. And you know him from his time as president of SEB and Trygg-Hansa. And he has also promised me that he is going to reveal what you're all is a little bit wondering about. What are his economic interests in Africa at the moment? So wait for that cliffhanger to come true. So with those words of introduction, I hand over to the point, the basic economic facts about Zimbabwe. Christian Lindberg.
Hello, yeah, like Anders said, I'm going to start with some general facts about the country, so everyone's a bit familiar with it. I'm not sure how much everyone knows. So it's a population is 17 million, and yeah, it's 26 billion US dollars in GDP. And if we put those numbers in a European term, that is the population of the Netherlands and slightly more than half the GDP of Latvia. And I will come to that later. have some comparison with other African countries to see difference. And you can see that Zimbabwe has about $500 less GDP per capita than South Africa, but still slightly higher than neighboring Zambia. We have a projected growth for 2024 of 2%, which is lower than South Africa and Zambia, but still better than South Africa. On the export side, you can see that Zimbabwe is lagging a bit behind the others, and it, like Zambia, has a lot of exports that is in minerals. Where Zimbabwe stands out is the inflation rate of the average consumer prices, which is significantly higher. And to further look at the economy, the split is by sector. 12% is produced by agriculture. However, it employs about 70% of the population, whereas industry and manufacturing employs 14%, but stand for 22%. And mining has 6% of the workers, but mining exports are 80% of all Zimbabwean exports. Main export countries is the United Arab Emirates, mainly in gold and diamonds, and then South Africa and China and Belgium. Whereas the imports, you can see there's a deficit at the moment, or in 2022, about 3 billion, and the imports are mainly from South Africa and China, Singapore. Then we have the government gross debt. It's 21 billion, and the IMF estimates that by the end of 2024 it will be at 98.5% of GDP. Of this debt, a bit more than half is external debt to the World Bank and the Paris Club and others. And of those 12 billion, the penalties and arrear represents more than half. So that's the loans that had not been repaid and penalties on those loans. We're going to come to it later, but here quite interesting points in Zimbabwe's recent history. 2008 there, right before the change to dollar, the GDP was only 4 billion. And in the last year of the dollar, it was $34 billion. And then with the new Zimbabwean dollar, they lost in a year a third. The growth for this year was about 5% projection, but the El Niño was very severe, so the agriculture output is down by 21%. So the country has been forced to import a lot of food and take on more debt. So that's why it, in the half-year report, it has been shifted down to 2%. So the economic case of Zimbabwe, has seen a weak economic development since its independence in 1980, but it was slowly declining. But with the land reform in the early 2000s, led to the economy starting to collapse, which is where we get the first hyperinflation in 2004 and 08, which leads then to the dollarization, which then after 10 years goes back to the Zimbabwe dollar. So here we have Zimbabwe versus Sub-Saharan Africa as total up until 2013. So it was a bit, the first round there you can see 2001 to 2006 goes from 100% to 1,000% inflation, but in the span of 2008 alone, it went from 100,000% to 79.6 billion% in November. which is when they make the shift to the dollar, as it was useless as a currency. And here we have the conversion rate, exchange rate between the Zimbabwean dollar and the US dollar. So, like I said, in 2019, they stopped using dollar as their national currency, and the Zimbabwe dollar is introduced, and almost immediately the inflation rises sharply, and the next year you can see 786%. And then, of course, in 2023, the inflation started rising again at a very high rate, and you'll see on the next slide how specifically the price for food and beverages, the inflation rate was higher than other parts of the economy. Then a couple of months ago, they decided that the Zimbabwe dollar didn't work anymore, so they changed currency yet again to the ZiG, or the Zimbabwean gold, which is a gold standard currency. So they have amassed gold in their central bank, which is supposed to back that, together with some foreign currency reserves. And as you can see, following the shift, the inflation rate went down from 57 to 34% in a couple of months. There you can see the food and non-alcoholic beverages spiking. So, going forward, what would be things to look for? We have, like I said, a new currency, only a couple of months old. And of course, the government and the central bank will need to adopt policies that will maintain stability and make people confident in using it as a currency, and not trust that it won't be worth half as much by the next afternoon. Also important is to, as they started doing, working together with the creditors and international institutions to pay off the arrears on and penalties, as it hinders them from borrowing from those institutions. They still owe, they paid off IMF, but they still owe the World Bank money, so the IMF can't borrow to them. But on a positive note, with all the green, the economies around the world going more green, Zimbabwe has a huge amount of minerals that are going to be necessary. Their lithium deposits are the 6th largest in the world. So, and from people I've spoken to, and from articles, they have a very well-educated population, which means that they can, if they can take advantage of this and give a boost to their Zimbabwean economy. Thank you.
Challenges seem a little bit bearable in comparison to what you have experienced. So, please tell us a little bit what you have thought to tell us, but also a little bit the typical Swedish question, hur känns det? How does it feel? Well, how did it feel when it was at the worst in Zimbabwe? Give us a little bit of the mentality. The floor is yours. And then we have some questions after this session.
Thank you very much. And let me first by thanking you, Anders. I don't know whether he told you how we got here. He walked in my office a few months ago and was looking for a visa to go to Zimbabwe. And when he got there, he then started sending me these beautiful pictures from Zimbabwe. And I asked him to come back and give me his honest view of how it felt to be in Zimbabwe. And unlike the typical Swedes who are normally very they don't really want to say what they need to say at any given time. He was very open with me, but very excited, and said, you know what, Priscila, I want to work with you because I see potential in Zimbabwe. And I didn't know that he was going to, in a few weeks, he was going to come back with this proposal to have this meeting. So I really want to appreciate you, Anders. Normally we pay for sessions like this to be able to just have people come and listen. And he has done it pro bono. And I just want to thank the presenters. Christian, thank you so much for the work and for the analysis that you have given. I'm not an economist, I'm a lawyer by profession. So I won't try and be an economist. I'll just explain things from a layperson's point of view. But what I'm going to avoid doing, which is what we normally do, because I was a politician, like he says, for about 20 so years. I was also a cabinet minister. I think sometimes we have the problem of trying to defend. So I'm not going to do the PR thing that you're asking me to do today. I think we'll do it for other time, because I'm sitting here and wanting to really have a frank and very honest conversation, because I think that's what would assist us coming out. So it's easy for me to come back and sugarcoat and say everything is honky-dory and it is fine, and I don't get anything. So I'm going to be I'm going to try and also be honest and be very open with you. So figures don't lie. And I think we do have the figures as they are. But I think the question that you have raised is, why are we still standing? And I think that's the fundamental question. You asked me to speak about how it was during the time. I mean, we went into trillions. You would carry your big bags of money when you were going to shops, because every other minute, while you are standing in a queue and you're trying to buy, the inflation would go up. And it just became not sustainable. So even the change of the currency didn't happen because of a policy decision, also, so to speak. I mean, I think people walked away from the currency because it wasn't working. It was easy to do barter trade than to go in and use your currency. And I think it's one of the things that we are still struggling with. But what I like is that we recognized that there were three main issues that were a problem vis-a-vis the economy. And it continues to be that problem, although we are managing differently and better in certain areas and not doing so well in certain areas. So like you rightly say, inflation became one of the biggest things. But you know that things to do with inflation are a vicious cycle. So you'll have your debt, you'll have your high interest rates, then everything falls apart. Because then you are trying to print more money, because that's the only way you can be able to survive. So the more you print out money, the more the inflation goes up, and the more you accumulate debt. So you kind of go back in that vicious cycle. So what we have been trying to do is to say we have these three demons, so to speak. Can you deal with the one without dealing with the other? Unfortunately not. But because certain things are outside our control. For example, let's just look at the issue of debt. Debt is accumulated even pre-independence. There was already an accumulation of debt. But the reason why we survived, and that's the only point that I'll differ with you a bit, 1980 to 1990, we did very well economically, even if you were to look at our growth rates and our GDP. But that is also the time that you then went into a social sector where you expanded a lot. So you are right when you say Zimbabweans are probably the most literate, not only in the region, but in Africa, because we did a lot in terms of education. We also did a lot in terms of building infrastructure around health. So if you come to Zimbabwe, you'll find at every district level, which is the smallest level, you'll find some primary health clinic that has been built. Of course, we are now struggling now to maintain that infrastructure. But between 1980 and 1990, we did a lot of that. And why? When you are coming out from the colonialist, there is also generally a lot of support from the international community. So most of our budget was funded as an external budget, which took over a lot of that social spending, which you do not necessarily have to do yourselves as part of your own economic development. Secondly, the whole issue that you're talking about around issue of land or mining, because we have two main sectors which are part of the economy, which is your mining sector and your agriculture. And because all these particular sectors were not in the hands of the indigenous people, when we went into that transition where, land tenure ownership was moving from your colonialist to the indigenous, there obviously was a rupture that happened during that time. So is the mining. Most of our mines were owned by like the Anglo-Americans, which were, British-owned companies. So by the time you were now bringing in the indigenous into that particular sector, you also had your challenges. So you find that from 1990, when we're now going into the area of 2000, that's when you started having the dip. Then we had a high when we were part of the inclusive government, which I said that I was a cabinet minister at that time, where you brought in the opposition and the ruling party at that time. And again, because there was support from the international community in terms of budget support, you had a situation where there was a certain space to breathe for government to then go into other sectors. So you find that our currency did better during that time, but still we did not deal with the issue around debt. So debt continued to be an albatross. So obviously when the inclusive government went off and we went back and you started having the discussions around sanctions, and the international community were no longer putting in the budget support. And that is true of any African country. So you find it even when you look at some of these countries to which we note as having a higher growth rate or higher GDP, most of it is about the international community and the support, the budgetary support. I know that there's now a shift because of the geopolitics that is happening, where generally for every African country that you talk about, the issue around budgetary support is no longer there, because now we are talking about investment, we are talking about aid, which is why for everybody else, the issue is around aid for trade. So I would say coming out of it, we are coming out of it. We have not gotten out of our economic challenges. We are coming out of it. But the clarity around what are the issues, I think is what the positive is. Because when you know and you have diagnosed the issue, then you are able to actually build on what the challenges are. I'm glad that you raised the issue around the green economy. And I saw Lars, I don't know where he's sitting, is one of our Swedish friends who we've been working with around what the potential around the green economy. What is it that we can do with the green economy? And thankfully, this is where the Scandinavians and the Swedes come in really good, because when you're talking about renewable energy, when you're talking about the environment, this is the space in which, you can get that support. But the challenge is, how do we get the Swedish investors to believe that the country like Zimbabwe is a place to go to? And I think that's where your PR is coming in. I think the first point is that the demography itself, when you are looking at the population that is in Zimbabwe, you have young population, you have a very active population, you have an educated population. And you also have a government that is recognizing that it needs policy changes if it's going to get into spaces with investors. You did indicate our trading partners. We used to have South Africa as number one, and like you're saying, UAE has taken over. China is also coming in. So it actually means that if there are certain countries that are coming in and are finding Zimbabwe as a place to invest, there must be opportunities that are in that place. So I think for me, the question that I would want to hear when we get into the question time is, what is it that we need to do to get you interested in wanting to at least find out what is in our country? We have just been elected as a chairperson for SADC, which is like our own regional organization. So you do have a market there of about 353 million. So you are not only looking at Zimbabwe and the population of 17 million, you are looking at a region that potentially can give you a market of 353 million. And the question that we would want to put across to you is, if you were to come to Zimbabwe, it becomes a gateway to that market. You may even decide to not start with Zimbabwe. Start with Botswana, start with Zimbabwe, start with Zambia, but still be able to access the market that is there. And I think for me, the opportunity that I get today is to say we are open for those conversations. We are open for you to come and see. We are open for you to see what is the potential benefits that you'd get. How do we have a win-win situation? Because like I said, other countries have come in, and by the time you are coming in, the Chinese and the Middle East would have taken the best of the cake. I think I'll stop there. Thank you.
If you stay on a little bit, see if there's any questions. I have one question. If you look at the figures, it sounds as though having the dollar was quite a good idea. Why did you, and also from an investor, it's much better to invest in something where you have a dollar than you have a local currency. Why have you been so eager to move away from the dollar?
We have not moved away from the dollar, and I should have dealt with that, because I did say one of the things we are dealing with is issues of currency reform. We still have a multi-currency. So if you are trading, you would still trade in the currency that you choose to. If you are wanting to trade in SEK, if you are wanting to trade in the euro, this is why we just don't say dollar.
Yep.
It's actually a multi-currency regime.
Okay.
But what we are trying to do is we want, because we realize that it's not sustainable to continue running on a currency that is not your own. It won't work in the long term. So, but we are clear that we have to deal with some economic fundamentals before we move to our own currency. That is one. The second one is that if you go to Zimbabwe and you've gone to Zimbabwe, you probably will not be able to see the ZiG in cash, because we have learned that one of the things that created the kind of inflation issues that you were talking about, where we're in trillions, was when we started printing a lot of money. And when we printed and it went into the market, then you created, a parallel market economy. So we are trying to manage the currency situation very, very much. I wish for myself we could go into the Swedish way of doing business, where you are almost a cashless economy, because then that way you are able to focus and follow through the currency trends. But yeah, we are not using ZiG for trading purposes.
Some of us might think that it was a good idea to have a local currency, perhaps not as good idea anymore. So now when you are chairman of SADC, I send you that little message for you to deliver. Do we have any question from the audience before we move on? We have a microphone being presented to Fredrik now.
Thank you. Very interesting to listen to this presentation. You mentioned briefly the Chinese kind of influence, and I'm curious about whether Zimbabwe is part of this Belt and Road Initiative, if you lend money from China, and how it's being used. I mean, we know that there's a lot of Chinese lending to the African continent now, and it can, of course, be extremely well, but we also know that there are, across the world, maybe 10 countries now at the brink of bankruptcies because they've not used those money very well. So if you could just comment on that, would be very interesting. Thank you.
Yes, we have got some infrastructural projects that we have gone in and we've borrowed money from the Chinese. So if you look at the list of our debtors, China is also a country in which we are in debt, and I'm sure a lot of other African countries. I think the difference that has happened with the Chinese is that not only have they come in with infrastructural projects, so you have a lot of build, operate and transfer projects that we have linked up with the Chinese. So they'll come in, probably put in a railway, and you agree on a period of like 15 years, where it's still in the hands. So they are getting the money from what you are earning, the revenue you are earning from the infrastructure that they have done. And then over 15 years, they then transfer that particular infrastructure to yourselves. And it makes it easier because then you are not borrowing directly. They are using their own resources and money. It has its own complications, clearly. I mean, it's not the best of models. But I guess if you are in a space where you are not getting investors elsewhere, you have to deal with what has been brought in. So for Zimbabwe, I know for most neighboring countries, there's actually bigger problems, like you're saying. With us, the area has been infrastructure and it's been mining. And we still have issues with that mining, because part of what we want to do is to do a value added, so that you are not taking it as raw. So he did speak around lithium. We have one of the best lithium. But our argument is that if you take the ore as raw as it is, and you go and get lithium from it, you are benefiting Northvolt and a market that you are creating in terms of the batteries. The question is, can you not come into Zimbabwe, put up a company that takes away that ore, comes up with the lithium batteries, we become beneficiaries of it, and we share the market together because it's in place. So we actually have a statutory instrument that tries to stop that. So in certain places it works, in certain places you still find that they're still raw. So the Chinese are in that area. So it's your gold, it's your platinum, and it's your lithium. That's where the Chinese have come in. And UAE too.
Super. Another question?
Thank you so much. Two questions, actually, if they're allowed. First one
one
is
and a half.
you're a role model for other women in Zimbabwe, but I would like to have a comment on the general position of women in your society. That's my first question. And my second question has to do with the flip side of maybe the same coin, and that's the cancer of all societies. It's called corruption.
Let me start with the second one, because the first one I love. So corruption is a real issue. It is a real issue. And we are trying to deal with it as well as we can. But the thing that I always throw back, especially if I'm talking to the international community, is sometimes you find that the illicit flows that get out of the country to the international companies are much higher than your corruption that is happening internally. So much as we are having this conversation, I think the conversation that we should continuously be speaking about is how do we continue to have investment that does not facilitate for the illicit flows. Mining, the thing that I'm talking about. Let's just give the example of UAE. If you are looking at some of the illicit flows, it's where you have the openings of where things like gold, get out of the country, undocumented, and get into these international markets. So the amount of corruption that could be happening internally compared to the corruption that has this international flair to it is much, much bigger. But the quick answer is yes, it is a problem, and we're trying the best that we can to be able to do it. But the way you can deal with it is to create strong, both domestic structures that either are able to deal with corruption by making sure that those people that are involved can be criminalized, but also blocking this linkage that is associated between the internal domestic corruption and international corruption. But it is an issue and it is problematic. The second one about women, and thank you very much, I hope they think I'm a role model, is we have done very well around issues of gender, both in terms of just the law. So if you look at our constitution, it provides, rights for women. But of course, as long as the economy is where it is, it means that there is a fight for resources. And where there are fights for resources, it's those that are much strong agenda that have access to resources. And when somebody does not have resources, you can't speak about empowerment. So if a young person, a young girl can't go to school because parents are choosing to have the boy going to school because of the issues that are to do with customs, it means that your girls are at a much less. So if you go to university, for example, you find that there are more boys than there are girls. So those structural issues still exist. But in terms of the law and in terms of your ability and capacity to do things, I think we've really moved from pre-independence. Now you're finding more and more women in these spaces. But the economy is still a problem.
Thank you very much. Please be seated. And we will be called back again when we have the panel discussion. And now we hand over the floor to Jörgen. What he doesn't know about African economy is not worth knowing, so listen carefully.
Thank you very much for inviting me. And so I'm Jörgen Levin from the Nordic Africa Institute. This is a Nordic Africa Institute. We are financed by the Swedish government, Finnish government, and the Icelandic government. Denmark and Norway used to be there, but they dropped out a decade ago. Anyway, so I'm gonna get back to some of the broader issues on economic development and numbers again. I'm not an expert on Zimbabwe, so I'm going to talk more broadly without mentioning any country names or but this picture is something similar that you've shown before. I have GDP per capita on this axis, and on that axis I have the average annual GDP growth from 2000 up to 2022. So I just want to show you that Africa, the economic growth performance is huge variation across Africa. So we have the high growth Ethiopia, Rwanda up here. We also have countries around 6 on average percent growth on average. But we also have Zimbabwe at the bottom. But you're not alone. You also have a couple of countries here because I have the red line is at 3%. So you can think about per capita growth. You know, that's the countries that are below the 3% here. So all these countries have had an annual average negative growth over 20 years. Which means, if I did my calculation right, Zimbabwe's GDP per capita are back at around the same level that you had 1970. So if you go back in 1970, Zimbabwe was one of the richer countries in Africa. So it has had a huge impact. Now, there are many aspects to discuss why some countries fail and why some countries succeed. One very important issue is productivity growth, that countries manage to use their resources efficiently. We often think about countries have human capital, you have physical capital, and then you're able to use them very productive. And in countries where policy failures occur, where government doesn't work, you have corruption and so on, you get huge distortions. So this productivity growth becomes negative. It's also about trade, that you have more open economies, you are able to import new technology. But when you have this kind of negative performance, it's also reflected in challenges on your trade performance. Another thing is also that when we look at the macro numbers, it's usually a reflection also of a lot of distortions at the micro level. So many African countries have weak productive capacity. I mean, there are very few large firms. Most of the labor force, on average in sub-Saharan Africa, 70%, are working in small-scale activities. One business with one or family members and 1 or 2 people employed. These are 70% of the labor force. So what they do, they are in low productivities, agriculture, informal sector, and they don't generate a lot of growth because it will always be low productive unless you can scale them up and make them grow. I'll come back to that. Another thing, if you look at, even if we talk about the African economic miracle from around early 2000 up to 2015, you still see that if you look at the investment GDP ratios, saving GDP ratios, they are basically constant, around 20%, which is much lower than the Asian of 30, 35, 40. Tax revenue is flat, 50-60% of GDP, despite efforts to try to reform the tax system, and economic structure remain unchanged. There are migration into urban areas, but it's very slow. It's still 50-60% population are in the rural areas. If we look at exports, I'm going to skip that one. One thing that matters is what you export. If we look for long-term development, economic growth, it's about the complexity of your products. It's not about producing more, exporting more minerals. Because as you said, if you are commodity dependent and just you double your copper export, yes, you get revenue in the short term, but in the long term you will not see a lot of value added. What you need to do is to make sure that you diversify your export, so you start to add some value to your exports. That has impact on long-term growth that is sustained. So particularly, I'll come back on this, the resource-rich countries. That's very important, but it's also very challenging to diversify economic growth. On the trade and industrial policies, you all heard about the Africa Continental Free Trade Area, which is a huge opportunity for African countries to increase the intra-African trade. And the most important thing, I think, is also that when you look at the intra-African trade, that trade is more diversified. It has more value-added content than trade with the rest of the world. So it is an opportunity to African countries to industrialize. You start with small light manufacturing and so on, and you can deepen the regional and also the global value chains. So that is crucial. Almost all countries except Eritrea have signed the basic ratified this AFCFTA protocol. But we also know that it's going to take a long time before it's implemented. The major barriers, as I see it, is the non-tariff barriers between African countries. They can be, for an exporter, it could be 100% export tax, similar for the importer. And these are tricky things too, because there's a lot of vested interest to keep those kind of barriers, because somebody is making a lot of money. But that is one has to work on. So now when this protocol is signed, so there's a lot of work going on in all African countries to strengthen the national capacity when it comes to trade, regulations and so on. So very good, but one also has to be realistic. This is going to take some time. There are actually model simulations also, which country is going to benefit more and less. And Zimbabwe is one of these countries that are in the top potential beneficiaries when you implement this AFCFTA. When we look at other important thing about the business environment across Africa, there has actually been improvement from early 2010 to 2021. I'll show you later, but it's also that still challenging, I would say. So, and another thing also to also make this trade policy work, because it's not enough to just have a nice trade deal. You need these productive companies. You need large companies. So the finance issues is a critical area. And also coming back to the macroeconomic situation in many countries, with a lot of which are countries that are debt distressed, that spill over also to the domestic market. Because it is also the case that it's not only the external debt, that is a balance of payment problem. The domestic debt is a fiscal problem. And it also spill over to to an investment problem, because the domestic interest rates, when you go to the bank, I don't know, Zimbabwe, Zambia, I think you pay 30%, Kenya is 20% to borrow in a domestic bank. And that is, of course, very difficult for if you have, you know, small business that want to invest and expand, and you have those kind of investments. So some of the broader challenges, I mentioned the macroeconomic and the debt challenges. I don't know the Zimbabwe situation, but it sounds you are a bit similar to like Zambia. It was a bit easier 20 years ago when we did the HIPIC initiative, because then bilateral donors could go in and pay off debts. Now you have debts to China. You probably have a Eurobond, so you have commercial debt holders, and then it's much more difficult to negotiate on how to restructure that debt. Zambia seems to have been managing now, where actually China have agreed to do some debt relief, but that has been a long negotiations. I mentioned also a bit about the taxation fiscal policies. So we have also the issue of corruption and spending inefficiencies, and at the same time there's a lot of demand because the demographics. So you're going to have a huge number of children now entering to school because of this changes in demographics. So that's going to require a lot of extra spending, and at the same time you have problem of raising tax revenue. And a particular problem with this tax revenue, so the social contract here between, you know, what type of services you get and what you pay. I worked a bit on Kenya, so I can clearly see there's so that's recent events. It started with the government to try to increase taxes, and at the same time there was a lot of critique on public services, so it's not working. And also that the taxes were raised just because it was supposed to pay off interest payments for the debt. That creates social tensions. And it is difficult with taxation, because the natural thing African governments do, you tax those that already are paying, the formal sector, the firms. You have value-added tax. But you have, as I said, 70 to 80% of the economic activities is a bit outside the tax net. So there has been new attempts to, I know, for instance, the Zimbabwe governments have started to tax mobile transfers. So you put a small percentage, which is not really good tax, because these are mobile transfers that goes to small business. You know, there's remittances and so on, and they're financing small investment. So you're really taxing, you know, resources that could be used for investment and growth in the future. But again, it's very tricky with this taxation, because there is a lot of pressure also from the donors now that the African government should increase taxes. Okay, human capital. That's also, I'm here thinking about both health and education. But if you look at on the education side, there's new data now where you not only look at, you know, the average number of years of education somebody gets, but also the learning adjusted years of education. So what you see is on average, African countries or students, they get 60% of the education they're supposed to do. So instead of 8 years, they get 5 years on average, when you have adjusted for what they actually learn. But here also Zimbabwe is on the better performing countries. I think if I remember right, so you are expected to get 10 years of education, you get 8, which is not bad. These other countries that are, Kenya is also high on that, on a top performer. Now, energy, electricity, we all know that that is a critical issue, and there are many African countries which have these kind of problems. So I don't need to elaborate a bit on that. I mentioned a bit about finance also, that this kind of macro instabilities also translate into poor financing opportunities. There was a study, you can probably not see this, but this is Brookings Institutions, where they looked at, this is small and medium enterprises, where they compared on countries in sub-Saharan Africa with the rest of the world. And what strike out, what is more of a concern is access to finance, electricity, and tax administration. So access to finance, I was doing working with firms many years ago, but that was 25 years ago. Access to finance was always the question coming up. What is your problem? Access and cost to finance. And of course, if you have, so I'm coming back to the macroeconomics. So this interaction, you can't only, you have to have your macroeconomics right, and then you have to do a lot of structural reforms to improve efficiency within the banking sectors and so on. So finally, I just want to show, this is from visualcapitalist.com, the world's and best places to do business. So what they do, so this is ease of doing business index, so they kind of including electricity, getting credit, enforcing contracts and also. And you see already that dark blue is not so good. Greener is better. Yeah, so you're a bit more dark blue than, for instance, the neighbors here. But on the other hand, you also see some of these countries that have high growth rates, also blue. But I think the picture is very mixed across Africa. There are in many countries, but then you also, of course, you have those countries where it's really are deteriorating. And I'm also going to show this one, you probably don't want to see, but this is governance indicators, Ibrahim Index of African Governance. So these countries on this side are improvements, and these are where it goes in the wrong direction. But you can just see, so this is a 10-year trend from 2011 to 2021, but it's actually more, in more countries it has been improving than if you look at those that are deteriorating. So again, I just want to stress when we come to policy advice, and it's very context specific, even if we talk about general issues on Africa, but talking about trade, looking at what makes countries really growing, one also needs to do a bit of context specific analysis to understand the picture a bit better. Thank you.
Super. Thank you, Jörgen.
I forgot to, could I advertise my...
Oh, sorry.
If you go to our website, we have this policy briefs, 4 or 5 pages on different topics. And if you understand Swedish, this is from the Economics Debatt, 2 articles.
As this is the economy section of IVA, we are very happy the way that you underline the importance of finance in building sounder and better nations. We take questions to Jörgen when we had a final little discussion, and now we hand over to Lars and ask you to put on your previous glasses from the World Bank and a little bit describe the medications you might perhaps want to prescribe.
Well, thank you, Anders, and thank you for the invitation, Ms. Ambassador. It's great listening to you. Thank you very much. I've only been in Zimbabwe once, since we were not really allowed to do a lot of business there, and I had to make an informal kind of trip there. But it's a beautiful country, and I came away with a 10 million bill that I still have somewhere. But I think just listening to these presentations, I think one has to recognize that Africa is a continent. We very often talk about Africa as it's same thing all over. It's actually very, very different. Everything from the south with Sahara and all the way down to South Africa, the east and the west and the middle. And you also have lots of differences within countries. I mean, our picture is very often of the smallholder farmer somewhere out But in reality, there are some very sophisticated parts of those most countries. Digitalization, for example, has come a long way. And I mean, if you look at M-Pesa, a payment system in Kenya, it was actually ahead of our Swish in being able to pay through the telephone. So, and today Kenya and Nigeria, for example, are doing a lot of things in on the internet and really moving things forward. So, and same thing with corruption and governance, as you saw here. It's very, very different. So, I think, but one thing that I think came up here in the presentation that is important, that historically it was very hard to go from one country to the next. To fly from one country to another, you sometimes had to go back to Paris or to London to even get now with Air Kenya and Ethiopia, and we actually within IFC, together with the Aga Khan Foundation, we try to get some of the national airlines together in West Africa, because that's very important. And I think the whole infrastructure, it's one thing to have a trade agreement, but actually being able to move with railways the things across, and that's very important for Zimbabwe, since it is a landlocked country. But I think if we look at and one more thing around Africa, I don't know if you remember back in, I guess, 2007 or something like that, The Economist had a front page with Africa as the future. I think that illustrates the mode then. That's what the environment I was working in a lot. Today it's very different. It's very tough, as you heard, with all the debt reschedulings. Most countries are focused on even developed countries on their own problems, like we are here in Sweden. So it's hard to actually get money or get attention for many. That's why I think this seminar is very good. If you look at Zimbabwe, some of the takeaways, just kind of repeating them, I think the 17 million people, but 30% are below 15 years. But they're also very well educated. Actually, some of the best businessmen I met and women I met in other parts of Africa are actually from Zimbabwe, especially down in South Africa. There are lots of them. We heard about the macroeconomic instability. We heard about the debt, 17 billion, and a lot of it actually being arrears and penalties. A lot of it to Western countries, but also quite a lot to China. The other interesting, I think, is the agriculture being 12% of GDP, but employing, I think it was 70 or 80% of the population. And then the minerals, that Zimbabwe actually has a lot of minerals with gold, platinum, lithium, you heard about diamonds, chrome and coal. But the infrastructure needs improvement all the way through. So there are great opportunities, but there are also great problems, as we heard. So I guess the question that I'm supposed to talk about is what can they do? What are the organizations that can help? And there are a number of them. If you look at the institutions that I kind of were involved with, the World Bank. I don't know how much you know about the World Bank, but it has really 3 parts to it, or 4. You got IDA, which is focusing on the poorest of countries, soft loans. Then you got IBRD, International Bank for Reconstruction and Development, which is handles the middle income, more commercial level of on the interest rates. Those 2 was the classic World Bank. And then you got the International Finance Corporation that was established, I think, in 1954, a little bit later on, who focuses on the private sector and the development on the private sector. including some consulting to government. Otherwise, we did very little with the governments, but some consulting, for example, and that business doing business report was an IFC developed product. And then you have MIGA, which makes guarantees against political risk. And then, of course, you got the regional banks for Africa. You got the Africa Development Bank, big, very, very important part of the kind of Africa Union machinery, you can say. And then you got some national aid organizations, the important ones being the UK, the France and Germany, and of course the United States. But Sweden has SIDA, and very often they have one part that is like in Sweden, the traditional aid, and you got the other one which is like Swedfund doing, or mini IFCs. As we heard here, their focus, as the World Bank kind of developed, it started out doing basically projects, very much infrastructure projects. Then, at a later date, back in around the decolonization, they became more and more focused on budget support, because the feeling was that the countries wanted to decide themselves what they should do, and therefore budget support was the important part. And now it has kind of diversified and is very much around the UN sustainability goals. And if you look at that's really, if you look at, for example, SIDA, I think they have a program around 300 million. A lot of them are on women, on the cultural issues and things like that. The recent development is really that people have realized that aid alone is not really the solution. It's very important when you got true problems and people are starving, but it's not the solution to development. So that's why and there is not enough money. There's not enough aid money anyway. So you need to create private sectors, and you need to get mobilized foreign and domestic capital to really get the economy going. And we know, as we've seen here, the small and medium-sized enterprises are that's where you get the employment. And we shouldn't forget that all big companies have been small once upon a time. So it really is important. And that's where IFC comes in. And the importance of IFC has increased quite dramatically. During my time, we increased the volume, the committed volume per year. I started 2005. It was $7 billion a year. When I left 6 years later, we did $21 billion a year. And total also refocusing on Africa. And very important, we built up local organizations, because we had to understand what was happening and follow the local newspapers, be part of the local fabric in those countries. And that's what we did. And it was a lot on as we heard here, financing infrastructure projects, hydroelectrical. At the end, or in around 2007, basically the World Bank decided not to finance any coal-fired anymore. We were fairly early there, I think. A lot of it was finance banks. We did a lot of support for banks in that we took part of their credit risk. I mean, I've been a banker. I know that bank officials are very scared of taking any risk. So what we did, we go in and we said, okay, we will guarantee your credit risk for 30% or something like some number like that of your portfolio. And we will also train you in how to lend to small and medium-sized companies. And then gradually you could, as they learned how to do this, you phase it out so that you could go on to the next bank. And that was a program that was very good. The other thing is that IFC today is probably the world's largest fund of funds. We helped create private equity funds all over the place. And so that was very important. Of course, the social and environmental issues were very important for us, and therefore we had to set standards. And the IFC environmental and social standards today are used basically by all banks in something called the Equator Principles when they do projects around the world. And that has developed, and I think we were the first bank who actually put human rights into our standards. That was a big fight against some of our shareholders. The World Bank and IFC has basically a board that is a sitting board. In other words, it's there all the time, meets all the time, and there's 24 representatives or directors. So you had constant negotiations with various countries on what you were allowed to do or not allowed to do, or get their approvals, and they had to send it home to their head offices and so on. Today, as I said, the private sector kind of focus has become important for all development banks. And in the World Bank, that has meant that you today has a much closer integration between IFC and the rest of the World Bank. I was called the CEO of IFC. Now it's a managing director of one out of 3 or 4 at the World Bank Group, as it's called. Same thing with the Africa Development Bank. After I left IFC, I was part of a commission headed up by Kofi Annan to look at the strategy of Africa Development Bank when they had a new CEO. And there again, one of the key things was to shift towards towards the private sector. Same thing if you look at the Americans have reorganized their whole system, something called the Development Finance Corporation. That is partly kind of integrating the USA AID and OPIC and other institutions they used to have. The English have done the same thing, and a lot of the smaller Europeans. Sweden is unfortunately lacking in that respect. We are still, I mean, you could just see, it was the other day, it was an article this morning, I think, in Svenska Dagbladet or Dagens Industri about the fight going on within SIDA and what to do. But basically, I think for private sector to, as you heard here, to develop, you need some type of stability and some rule-based society. The more you have of that, the better. You need financing and you need infrastructure, and of course you need entrepreneurs. You need people, and I think in many ways, I think Zimbabwe is moving in the right direction. But unfortunately, I think still the World Bank and those organizations can't do very much because there are still issues around the arrears and the penalties. And I think so there has been what's called a structural dialogue under the leadership of IMF around us. Unfortunately, I think, and you probably know more about this, the Americans pulled out because they just, I think a month or two ago, because they felt that there was not enough progress on the human rights and democracy issues, which I think is too bad. And I think I looked at Africa Development Bank, but it seems to be be in the same boat and not doing very much. So that's, I think, clearing the arrears is not only repaying your debt, but it actually is an important step in kind of re-engaging with the World Bank and others. There is one little organization that I feel very strongly for that actually has done things with Zimbabwe, and that is an organization called Africa Risk Capacity. It's an insurance company that insures African states against natural catastrophes, drought and flooding, cyclones. They also do pandemic now, and this company, and it has really one political part, which is a treaty within the African Union, and then an insurance company that I actually founded for them. And over the last 10 years, they just had a 10-year anniversary. They have insured over 100 million people, and they paid out to 7 million people. And these are people that would be starving if they didn't get the money. A lot of it goes to for milk in schools for children and so on. And normally here we used satellite technology, so we could see this from above. So you don't have to wait for the CNN cameras to film hungry children, which takes a year until the international community comes together and very often give some money. Here you could pay it out immediately, and it was four times as effective as these kind of aid coming late. And the coverage this year for Zimbabwe was $26 million. So that was interesting. Now, given that the fact that kind of Zimbabwe is a little bit locked out from the World Bank, what shall they do? Well, as we heard, they do like many others. They also turn to China. So there is also negotiating going on around the arrears. And just last week, I think, or 2 weeks ago, there was an announcement of that China will finance a railroad improvement of 500 million, which will be, build, own, and transfer type of situation, as I understand it. And I think that is, and there's a lot of discussions, is this a good or bad thing? You can discuss that forever, but I think it's typical for what's happening now in the world, with the bigger competition between the US especially and China, and countries like in Africa and other smaller countries will have to figure out how should they deal with this. How do they deal with both without getting on the blacklist of the other? And I think that's where Zimbabwe seems to be. I should mention that that IFC actually just in February produced a diagnostic of Zimbabwe, how to create markets in Zimbabwe, and it's very much focused on what I've talked about, the agriculture sector, about the mining. The railway is very important. If you go back historically, the railway could transport 18 million tons a year. Now it's down to 2. So you actually can't get the minerals out. And that's why I think the Chinese are very interested in this. But also tourism, Anders. They highlight tourism as a great opportunity as well. So with that, thank you very much for listening.
Thank you very much. And part of our social contract in Sweden is that we end on time. So the panel discussion will be next time, because I will never dare to take that away from you. But just some final words. And that is, of course, my own impressions from visiting Zimbabwe. You always start something with the travel. And my impression was traveling in Zimbabwe is a little like traveling in Wales in the 70s. Charming is not the word you're looking for. Calling it stylish would be an insult on style. Zimbabwe is rustic, friendly, mildly run down, with magic scenery and wildlife. Surely Zimbabwe has seen better days, but has not given up on finding them again. Thank you for coming.